Hello guys, thank you so much for joining this video once again. I really appreciate the support you guys have been giving me in the past few days. We're also getting a lot of people joining our live stream where yesterday we have analyzed and discussed the potential outcomes of yesterday's news. So yesterday was a big day for all the people trading in the financial market. And if you guys don't know, the US announced that they would postpone the war on Iran, and this made crude oil prices go down while uh, big indexes and big stocks rally. So let's analyze in this video the outcome of what happened really yesterday. So instead of just reacting to headlines, I want to go actually by market because right now everything is moving, but not in a clean way. It's not one direction and it's not one story. It's like every asset is saying something is slightly different. So let's first start with the S&P, okay? So looking at this, you can see it clearly. We had a drop, but then a sharp bounce. And at first glance, it looks strong, okay? So if you see in this small candle, yesterday's candle, it's like the market just absorbed everything and moved on. If you really sit with it for a second, it's not a breakout. It's more like we fell and that we're just trying to stabilize because the way it bounced, it wasn't gradual, it was fast, which usually means short covering, position shift, and not necessarily long-term buying. So for the S&P 500 right now, it feels supported but not confident. So if you go to the 50 minutes chart so you can really analyze what happened yesterday, or maybe go to the hourly instead. This one could be better. Oh yeah, this one is better. So we opened the market here, okay? So we closed here on Friday at 6,500. Then we went up to 6,650. Now we went down later on the day, okay? So this happened at around 3:50, okay? So around 3:50 p.m., 3:30 p.m., sorry, the market went down again. So next we move on to NQ, okay, Nasdaq. Okay, hourly chart. This one is always more sensitive. Tech reacts faster to everything, rates, liquidity, sentiment, and especially geopolitics. And what's interesting here, it didn't panic as much on the way down, but it's also not exploding on the way up. So you're getting this kind of hesitation, which tells me one thing. People are not fully convinced because if the market really believed the war risk is gone, inflation is going, and everything is fine, the Nasdaq would be flying back to 25, 200 or even more. So properly fine, but it's not. It's moving, but with doubt. Now, let's talk about the big stocks because this is where you really see the truth. Let's take something like Tesla. Some Tesla still managed to go up, okay? They're not collapsing, but they're also not making aggressive new highs, as you can see here, okay? So we opened the market at roughly 365, went up to 382, reached the previous rejection zone, and then the market went down. Let's check if it's the same thing for all the other. So yesterday we've seen Tesla gain a lot of value though. If you guys remember on our live stream, we've seen Tesla gain up to $13, like 6% or even more. So go to Nvidia, for example. Oh, slightly the same thing. We went up, then 350, and everything went down. So it's more like they're holding the market together and not leading it higher. And there's a big difference because in strong markets, the leaders lead. But right now, the leaders are just not breaking in. So it's more defensive strength than aggressive bullishness. So next we'll be moving on to crude oil to see where the WTI crude oil is actually performing. So yesterday we've seen this massive shock, 8 a.m. Boom, the market fell to 84, then went up for a bit, went down, bounced up again, and now we're short, okay? So if you can see here at 350, 330, market went up again. So it is probably the most important chart out of everything because oil doesn't care about narratives alone. It reacts to risk. And what we saw was a pretty sharp drop, which lines up with the whole idea of okay, tensions are cooling down. But here's the thing, oil dropping doesn't mean the risk is gone. It just means the immediate fear got priced out. And oil is very sensitive. It can drop fast and spike even faster. So right now, oil is basically saying, okay, maybe not worst case scenario anymore, but it's not saying everything is safe. And that difference matters a lot because if oil suddenly turns back up, that's when markets will react again. Not slowly, but very, very fast. So next we'll go moving on to our safe haven commodity, as they used to say, but I don't see that happening anymore, okay? So where's my gold here? Okay, I don't want to take the futures. So let's look this commodity here. 4,400. Yeah, same thing. So we opened on a high, 10 p.m., went down, up again, down, and now it's going up. So gold is interesting because it's not behaving like full panic is over. Usually, if everything is truly calming down, gold should drop very hard. I mean, it did drop, but not the same level we used to see. But if it holds or doesn't fall much, that tells you one thing, that some fear is still there. And that's kind of what you're seeing. Gold isn't screaming the risk off, but it's also not saying all clear. It's just sitting there. And when gold just sits there, usually means uncertainty hasn't gone away. It's just paused. So if you put all of this together, the S&P is bouncing but not breaking out. The Nasdaq is moving but still hesitant. The big techs are holding but not clearing. Oil is dropping but still sensitive. The gold is stable but not collapsing. And this is not a clean market. This is a market that's reacting but not fully committing. And I think that's the key point because if everything was truly resolved, you'd see alignment. Stocks up strong, oil down steady, gold down, and tech leading. But that's not what we have. We have mixed signals. And mixed signals usually mean one thing. The market doesn't really know yet. It's just adjusting in real time. So right now, I wouldn't say this is bullish. I also wouldn't say it's bearish. It's more like a transition phase where position is changing, but conviction is still low. And those phases can go either way. So the mistake right now would be to look at one green day and assume everything is solved because that could be the biggest problem. So, in my opinion, I think the main driver that made the market to go in a sideways again is that Donald Trump, although he announced that he had productive conversations, as he said, with the Iranian government and he would see that the war would end very, very soon. Well, the Iranian government simply denied any talks with Washington. So Tehran said there were no talks with Washington, and Trump just presumably did that. So he can actually just fix the market conditions ahead for this week because the situation was a bit too tense. All the major stocks were losing value. Inflation will go up again because oil prices are going way too up. And we needed something to control the situation. So that's what I said in my live stream yesterday. Don't really think this is a great sign because we don't really know if those stocks really existed. And once you find out, that would be a great and sharp movement for the market, which you may make, of course, go rent. Because when you break it down, asset by asset, you realize nothing is fully confirmed yet. Anyway, that's how I see it, guys. Maybe different for you, but that's how I see the situation that's happening right now. So, thank you so much for your time watching this video. I really hope you guys got some value out of it because this is one of the most important topics ahead of us for this week. I usually talk about macroeconomics and all of these important details about macroeconomics and fundamental analysis because that's the main driver of the market these days. You cannot deny it. That's the driver of the market and the driver of the new world shape. So thank you guys for watching this video once again. I really appreciate it. And don't forget at 9:20 a.m. New York time, I will be live on I'll be live, okay? So I will be live on on YouTube, of course, at 9:20. So I'll be waiting for you guys. And thank you so much for watching this video once again. Have a good day.